For the first time in a year, OPEC Plus, its allies led by Russia, agreed to make an oil production cut. At a meeting held yesterday, OPEC decided to reduce production by 100,000 barrels per day from October, taking supplies back to August levels. Now, why has OPEC cut oil output? Before getting into it, let us first understand what OPEC is. OPEC stands for Organization of the Petroleum Exporting Countries, which is a bloc of 13 oil-rich countries. Now, this bloc controls close to 40% of world oil production and coordinates on production levels of oil. Now, coming to the production cut, the trim is so small that it is only about 0.1% of the world's output. While this, of course, won't cause a fundamental shift on supplies, this does signal a new direction for the oil markets after over a year of gradual increases in production. Now, this is done with more of an intention to stabilize oil prices after the recent decline. Oil prices are currently down from all-time highs on the back of weak demand outlook. Crude oil prices are expected to remain volatile as there are a number of factors at play here which are feeding into a highly uncertain outlook. Now, we will discuss this particular news in more detail in our Third Empire episode, and we'll also talk about the significance of OPEC. On the back of rising credit demand in the country, the top two banks, HDFC and SBI, are aiming to raise roughly Rs 10,000 crore by selling perpetual bonds. Now, before we get into the details of this, let's understand what a perpetual bond is. Perpetual bond is a risky fixed income instrument that has no maturity date, and these bonds are not redeemable. However, they pay a steady stream of interest payments, but an investor does not receive the principal payment. Now, these bonds are an economical way for public sector banks to raise capital, particularly when the equity markets are volatile. The recent growth of credit is the reason why the banks are rushing to raise capital. In view of higher credit demand, banks approach markets to raise capital. When you look at this chart, credit growth in the country has recently resumed after a long hiatus. The fundraising news indicates rising credit demand in India. India's credit growth is at a 3-year high and is expected to continue to increase as the economic recovery gains more traction. And we believe that access to credit is crucial for economic development of any country. After surpassing ambitious export target of $400 billion in March, India's merchandise exports are slowing. Let's understand why. India's merchandise exports contracted by 1.15% year over year to $33 billion in August. Now, with imports growing faster than exports, this has put pressure on the country's trade deficit. Now, exports have marginally decreased due to several global factors that include a decline in demand from China due to COVID-induced lockdowns and recessionary trends in major economies in the West. Now, this is especially true for exports of engineering goods, which actually fell 14.6% in August this year. The government also imposed export duties or restrictions on some commodities to address inflationary challenges and to also tackle shortage concerns. Now, this is also another reason why exports are slowing. The outlook for India's exports does seem uncertain due to global growth conditions. Imports growing faster than exports is also likely to pressure the trade deficit and current account deficit. However, in the long run, numerous free trade agreements recently signed by India, the PLI scheme, and shifting demand from China all augurs well for India's export economy. these news mean for you? While OPEC have cut production, it won't cause a fundamental shift in demand and supply landscape, as the cut only accounts for 0.1% of the world's output. This will have an indirect neutral impact on you. The fundraising news points to an increase in credit demand in India, which is crucial for India's economic development. This will have an indirect positive impact on you. The macroeconomic environment at the moment makes export outlook for the country uncertain. However, we believe that once global headwinds subsides and the policy efforts take shape, India's exports will be on an uptrend. This will have an indirect neutral impact on you. While I say this is me, Merlin Susanna, signing off. Take care and stay invested.
Did you like watching this video? Then download our app Informed Investor to watch more such informative and interesting videos.